Hello, today we're going to talk about Chapter 8 and current liabilities. This chapter will make a lot more sense if you take a few minutes to go back and look at Chapter 3 and the classified balance sheet. There's an example of one on page 135. Classified balance sheet separates assets and liabilities into current and long-term sections. Okay, current means that the assets are likely to be turned into cash within a year. And as we'll see with the liabilities, current liabilities are those that must be paid within a year. This is important because financial analysis uses current assets and current liabilities to do ratios to make decisions about companies' liquidity. Can they pay their liabilities when they come due? That's what liquidity means. All right, liabilities. Liabilities have three essential characteristics. They're probable future sacrifices, so it means that you're going to have to give up something in the future. Okay, arising from an obligation that you have right now on the balance sheet date that came from a transaction or event that happened before the balance sheet date. Okay, example, salaries payable. Okay, you're going to have to make a future sacrifice of cash to pay your employees that you owe them now on the balance sheet date for services that they provided to your company prior to the balance sheet date. All right, we'll go to the next slide here and talk about current versus long-term. Okay, I've already talked about current and long-term and the differences. Generally, the rule is within 1 year of the balance sheet date. Okay, there is one exception. If the company's operating cycle is longer than a year, then the current liabilities include everything that is included in that longer operating cycle. Okay, one of the examples they give is a winery. It takes a long time between when you start to grow the grapes to make the wine. So an operating cycle is typically longer than a year for those types of businesses. That's rare. Most of what we're going to see in this course is going to use that 1 year date. All right, here is an current liabilities section of Southwest Airlines. Current liabilities, accounts payable, salaries payable, interest payable, any of those kind of things, and any other accrued liabilities. So taxes, any of those kind of things are going to be in current liabilities. Now, if you have a note payable, and I'll go on to the next slide. Okay, notes payable. Okay, this is the interest calculation that they did not give you back in Chapter 3 when you were doing accrued interest receivable. Here is the accrued interest payable calculation. It's the same, it's just that it's interest expense and interest payable now, where back then it was interest receivable and interest revenue. So you need to know when you're looking at notes, is it a note receivable? Is it money that is owed to the company? Or is it notes payable? Is it money that the company owes? All right. One thing is with the notes payable, and this is back here somewhere, current liabilities, if we have notes payable that include payments, then the payments that are due within a year are included in current liabilities, and it will say current portion of long-term debt. All right, I hope this helps. Thanks.